The cost of Ethereum, ETH, hits $2,000 once again as data indicates a surge in network activity. Despite regulatory actions taken against Binance, an upsurge in Ethereum network usage, alongside the anticipation of a spot ETF approval, propelled the price above the $2,000 mark. Ether, marked as ETH, is currently trading at 2,072s, showing a slight increase on November 23rd, sustaining its position above $2,000 after briefly dipping to $1,930 on November 24th. Over the past week, Ether's value has risen by 2.5%, while the overall market capitalization has expanded by 0.5%. This climb is attributed to enhanced decentralized application metrics, higher protocol fees, and Ethereum's dominance in the non-fungible token (NFT) market. To evaluate Ether's ability to hold the 2,000 price level, it's crucial to consider the impact of Binance's recent regulatory issues following its settlement with the United States Department of Justice. Investor apprehension lessens as Ethereum network conditions show improvement. Binance leads in Ether spot trading volume, contributing to 30% of ETH futures contracts open interest. The swift closure of Binance's $235 billion worth of ETH derivatives contracts could yield significant consequences. Despite initial analyses suggesting minimal changes in spreads and liquidity, Binance saw net outflows of $153 billion between November 21 and November 23 as reported by DeFi Llama. The regulatory environment presents both risks and opportunities. Some interpret Binance's actions as proof of adequate reserves, while others express concerns over the $4.3 billion fine facing Binance and its former CEO, Changpeng CZ. Zhao. Notably, Bitcoin advocate Luke Broyles advised followers to withdraw their coins from exchanges. Even if Binance continues operations and secures all client assets, uncertainties persist about the long-term impacts of full compliance and increased scrutiny. Additionally, the association between Binance and stablecoins like Tether, USDT, True USD, TUSD, and Binance USD, BUSD, raises additional queries. Government agencies gaining access to previously undisclosed money laundering and terrorist financing operations through Binance, including fiat payment gateways and banking partners, heightens the likelihood of regulatory actions against stablecoin providers. Particularly damaging to Ethereum is the news of Binance being the third largest ETH staker, with $1.124 billion in deposits, according to DeFi Llama. However, recent regulatory advancements also bring some positives. Binance's shift toward full compliance diminishes the risk associated with unregulated exchanges, potentially increasing the likelihood of the U.S. Securities and Exchange Commission approving spot, exchange-traded fund, ETF, instruments for cryptocurrencies. Leading mutual fund managers in the industry, such as BlackRock and Fidelity, have recently shown interest in launching Ether spot-based ETFs. Moreover, the SEC's lawsuit against Kraken on November 20th, which lists 16 cryptocurrencies as securities, excludes Ether. This exclusion diminishes the possibility of regulatory actions against the Ethereum Foundation and entities involved in the 2015 initial coin offering, ICO, offering a glimmer of hope amidst regulatory uncertainties. Ethereum's network health and the surge in NFT markets. Assessing the health of the Ethereum network, Ethereum dApps attained a total value locked, TVL, of $26 billion on November 23rd, indicating a 5% increase from the previous week, according to DappRadar. However, a hack significantly impacted DYDX, resulting in a 16% decline in the protocol's deposits. While Ether's market capitalization of $248 billion trails behind Bitcoin's $728 billion, both networks generate similar protocol revenues. Over the past 7 days, the Bitcoin network has accrued $57.5 million in fees, compared to Ethereum's $54.3 million. These figures exclude ecosystem fees from platforms like Lido, Uniswap, or Maker protocols. Ethereum has also reclaimed its leading position in NFT sales, recording $12.6 million in transactions within 24 hours. Despite a brief period where Bitcoin led in NFT activity, Ethereum remains the preferred blockchain for prominent NFT projects. The positive performance of Ethereum on November 23 can be attributed to improved on-chain metrics, growing expectations of a spot ETF approval, and reduced regulatory concerns stemming from the 2015 ICO.